Hey guys, Mike here. So, interesting day in the market, and today is a very important day, and I will tell you why in just a minute. You may not be aware of that, but it is something you need to put on your calendar from here on out. We'll also go into, there is earnings coming up, right? So we're going to look at actually what the market is expecting for the move, and then we'll look at the charts on those, and we'll look at Tesla, which also had another big day today, as well as some other things, especially the economic data that's coming out tomorrow after the bell opens, okay? But I always like to keep you guys up to date on this, so I decided to compile it all together. And when we talk about manufacturing data, still in contraction. You have Dallas Fed manufacturing data we got out on Friday right here. Anything below zero is in contraction. And they're kind of saying, hey, you know, is this ever going to turn up, right? Because you see this in other areas when they contracted. You usually get a turn up right there. It depends on where you're at in the business cycle, right? You come over here and look at the Kansas City manufacturing data, same thing, below zero, still in contraction. The one thing about all this data is it's not coming in as bad as they think, right? It's negative, but not as negative as maybe the previous reading, okay? Richmond Fed, I actually had it, I don't know where I put it. It was the same thing last week, just hot garbage, okay? But as I was talking to my friend about this, it's only 30% of the economy, right? So here you see S&P Global Flash US PMI, right? And you see manufacturing output. Well, obviously below 50, that's kind of contraction area, but you see services. You see this big gap between manufacturing and the services activity, okay? And usually you see they go hand in hand. That makes up 70% of the economy. So that's why you're seeing the economy hold up and we're still spending and all that fun stuff because the majority of us work in the service industry. Now, what's really important about today is it marks the start of what is considered the best 6 months of the year, which starts usually October 28th going through April, okay? And this is that whole sell a man, go away thing, which I have debunked. If you look over the last 10 years and videos I've done for members and stuff, that is not true. But still, this is what it's marked out today. And the reason why I say October 28th especially, I'm doing a members video on this for them tomorrow to show them the charts on this, is so important is because this is when they say money flows back in, right? It has been sitting on the sidelines maybe, and maybe they're going to get more aggressive and start coming into the Mag 7 or other stocks and stuff and start building it back up, right? And you can see, I mean, percentage-wise, I mean, 77% higher is a pretty good rate, right? On average, about 7.1%. Every year is going to be different, depending on what's going on in that year and stuff. But, you know, we'll see how the next 6 months pan out for us because we're up huge already, right? Now, when it comes to the earnings, as you can see tomorrow, SoFi in the morning, PayPal, and then BP, McDonald's, Pfizer, Royal Caribbean, JetBlue, Crocs, all right? And then after the bell, AMD, Google, Snap, Chipotle, Visa, First Solar, Reddit. I've already gone over AMD and Alphabet's charts, but when you look at these right here. This is the implied moves, what the options market is expecting when they report. Look at Snap, like 19%, Peloton 15%, Carvana 13%, right? Even SoFi is up there at 11% move. If we start kind of scrolling down and looking at others right here, you can see there's Meta, only a 7% move. I actually thought it would be bigger. Let me know if you thought differently. PayPal, expected about a 7% move. That makes sense. As we scroll down here, you'll see some other big ones we're looking at here. There's AMD, there's Amazon, there's Google. You can see anywhere from 5.5 to 6. They're not these crazy high flyers like, you know, 22% on Tesla, right? Which they only expected like 8% that day, which is nuts. This is just the expected move. It can go higher or lower, by the way. Microsoft, 4%. Start scrolling down looking for Apple. Apple is definitely one of the smallest moves they expect. And so this is why when you look at these implied moves, if you're buying straight calls or puts and that's all you're doing, then you got to beat the expected move down or up, right, to end up making money. That's why, because the IV just absolutely drops off a cliff the day after they report earnings. And so just keep that in mind. Again, here's SoFi, 11% move right here. And even if it just makes the expected move, that's going to be around 12.41. It can always go over. It can always come in under the expected move, obviously. But when you come down, if it drops back down right here, then you're looking around 984. And they're going to have to hang the moon because this move has been huge, right? I mean, it's moved up 44% going into earnings. So just kind of keep that in mind right here. And unlike some of the other charts we'll see, it's not exactly a structured type of move that I like to see. But when you look at it, I mean, look at this right here. This is IPO price right here. It's finally gotten just above the IPO price, all the way up to 27, and it was just downhill from there, okay? And so this has been an enormous move up on this one. What's really funny, though, is when you go on the weekly, it's just never happened. Look at SoFi's RSI on the weekly. It's never been overbought, and now it's way up there. Never been overbought, right? In 3.5 years. You would thought it'd be overbought here? Nope. Okay, so Again, they're going to have to hang the moon to continue to move higher. We'll see if it's going to be a sell news event. We'll see what happens on this one. I hate when stocks move up like this in the earnings. That's just me personally. But maybe they'll buck a trend and it'll keep going up, okay? Let me know what you think about that one. PayPal here, I mean, obviously, I tell you, when you get those golden crosses, again, they are very powerful things. And the 50 crosses the 200 right there. It's been a constructive move up, just kind of bounced along this trend line. And this hasn't been a big mover, right? It's taken a while to move up to this level. And so if it does expect to move, you're looking around almost 90 bucks on it. Again, if it comes down and breaks that trend line, that's not going to be a good thing. And so you're probably heading back down to that shaded area if it does end up coming down. There's another one weekly. It's overbought, but there's another one. When you look at this one, because it has a lot more history than SoFi, when it gets up there, it can stay overbought, right? It's not like when something gets overbought, they go, oh my goodness, look at that one. And so if they got really good earnings coming out, and this thing is just going to continue to churn. Right, and so again, you look over there. I mean, this is a $320 stock at one time. Holy moly! CMG, which is Chipotle, this one's been a very constructive move up. It's just been bouncing, coming back down, testing support, moving up repeatedly. It's going up. I love this kind of move right here. Like this is a good move right here. And if it makes the expected move down, if it does break, going down around 56.43. Move up right here, you go into 65, and after that, you go into all-time highs, right? There's all-time highs right there. And again, this is a company that has a lot of growth. You know, it did change CEOs, if I'm not mistaken. Remember, he went over, what company did this CEO go to? I'm trying to think of what company he went to. And so we'll see how they're going to report and do it and everything. And Cava, C-A-V-A, could be a sympathy play on that one. Okay, if this moves up or down, you could maybe see Cava do the same thing. Now Tesla obviously came up. I saw look, once it gets above 270, 271, should be going 276. We thought we were heading there. Hit 273 and sold off the rest of the day right there. And again, if it breaks this trend line right here, we probably come down, maybe hit this fair value gap down there right there, and kind of mitigate that. But I think the ascending trend line will hold anywhere from 245 to like 258 if we break that line right there. But I'm not saying we're going to break it. Maybe we come in and just retest it. And then if we do get back above 269.61, 276 is definitely going to be in the cards for sure. And we'll go back over it in just a second to tell you why a lot of people are talking about 300 on this thing. But again, third day in a row, third trading day that is, it's number one, beating out NVIDIA again. What was NVIDIA doing? Nothing. Remember, we talked about these two. It's almost impossible for them to move together for multiple days at a time. But the reason why people are talking about 300, and it'll go quickly, one, you don't have a lot of resistance here, but you also have gaps to be filled, right? Here's another gap. And you see that right there. It takes you all the way up to around like $291 right there. So we can get above 276, go to 280. And then get up in that gap. You know, Tesla loves to fill those gaps, and it will fill them quickly, okay? So just keep that in mind. I'm not saying it's going to go there right now, but it does have the bullish flow behind it, all right? It does need to pull back, sure. And the thing you're watching for is, do these pullbacks start to get bought up? Because that is obviously a big move up, all right? Huge momentum. Tesla is a momentum play, all right? So we'll watch for that one. Now, looking at the indexes, we talked about on Sunday, would we just kind of wedge right in this triangle pattern right here, or right now on day one? Is what we're doing. We got a huge expected move because of all the news and the earnings coming out, right? It's about a 4% move on the SPY right here. And again, these levels are just going to stay in place around 585. And as long as we're above 580, right, that's actually a bullish thing. You get below 580, all of a sudden you're testing this trend line at 578, 579. If that breaks, well, that's not good. Okay, right now we're still almost in the middle of this move right here. Now QQQ, it was actually the strong one starting out. Basically gave it all back, basically into flat for the day. And this one has almost a 5% expected move because you're getting a lot of what? The Mag 7 reporting, a lot of text reporting this week. And so this is absolutely moving like crazy. And so right now, the last two trading days, you see it come down a little bit. And what you're seeing is the same thing, right? You see a big pop in the morning, and then it's just selling off, right, for the rest of the day. Not getting a big pop in the afternoon like we were getting, usually around 2 o'clock or so on. And Tuesdays have been kind of rough, so it's going to be interesting to see how Tuesdays bring. It's kind of hit or miss, but for the most part, if you look back at all the Tuesdays, majority have been red over the last few weeks right here, the last probably 6 weeks actually. And so, you know, those lines out there, 497.15 right there, then 500 breaks, we go to 502.54, which is all-time highs. We break down below, we do get these gaps down below that could fill, and a lot of this is going to depend on how the market accepts the earnings, right? If it's great and they hang the moon, guess what? Those highly weighted stocks are going to pull us up to all-time highs. I don't think anybody will be surprised by that, but if they don't, well, watch out below. Now, IWM had the best day. It was up like 1.65%, just busted out right out of the gates. It performs very well on this date. And when you look, that trend line right there, I put it right there. I said, if it breaks above this trend line, you know, we're good. And it just could not stay above that trend line. As soon as it hit it, you can see how many rejections. One right here, 2, 3, and then today, 1, 2, 3, 4, 5. And so that trend line is powerful. Watch that level right there. If we finally push through it, let's say we push through it tomorrow, and we are at what? We're almost at the weekly expected move already, right? And again, the weekly expected move is only good 67, 70% of the time, but that's pretty good odds. And if usually when you get out above it or below it, as you saw last week, you'll pull back into it, okay? But IWM's on fire. Remember, seasonality-wise, November, December is a good time of year for IWM. And so if we do push above this, watch this daily fair value gap. We pushed into it today. We got the reaction we should have got. We sold back down. If it respects the fair value gap, it's going to have trouble getting out of this weekly expected move. We may just stay right there. Okay, that's normal. If it cuts right through it, this thing is going to explode, right? That's usually how it works. And it'll probably come back down and use it as support. And so let's just see, because it respected it today. When I say respected it, that means you had a pullback, which is what should happen. You should, if you're going up into a fair value gap like that, a daily or a weekly, you should see some kind of push down once you get there, okay, if it's respecting it. If it's not, it'll just cut right through it, okay? And so, again, you got a gap down below. Most of the weekly expected move is to the downside. It does have a lot of earnings reporting as well, so just watch IWM. Could be the biggest mover for the week, there's no doubt about that. And so, again, bullish seasonality for this one over the next 2 months, so we'll see. I mean, the whole market is supposed to be that way, but we'll see what happens on this one. Now, looking at what we got for data tomorrow. Only thing you got going on after the bell opens, consumer confidence, and then JOLTS job openings. Okay, remember, we always get the ADP non-farm employment numbers the next day, which usually doesn't come out the same as JOLTS jobs. If JOLTS jobs is positive, the other one's usually negative, all that fun stuff. But the market will react off this data for sure, because what are we always looking at? The job data, see if the labor market softening, oh my goodness, do they need to cut rates again? All this fun stuff. And right now we've been getting strong data, which is why you see the 10-year yield going up, okay? And expecting maybe even see more inflation and things like that. So hopefully that makes sense. If you get anything out of it, again, please hit the like and subscribe button. Really appreciate you guys who do that and share the video and stuff. Think about signing up for the membership, less than McDonald's combo, and that's everything you get with it right there. And if you sign up today, you'll get the video tomorrow that I'm going to be putting out for everybody. So have a good one, and I'll see you tomorrow.